It's a good thing we have the co-founder and CEO of Mortgage Market, Mr. Tim Akinnusi, here to dissect it for us. Mortgage Market is South Africa's first independent online home loan marketplace. You're teaching me new things every single day. Simplifying the mortgage process by letting users compare rates, fees, and terms across multiple lenders. It's a digital platform that streamlines applications, reduces paperwork, and empowers buyers to make informed decisions, reflecting the growth role of fintech in South African home financing. Thank you for being you. Because when I was trying to buy property, we didn't have people like you to make it less intimidating. Why is it so intimidating, Tim? And thank you so much for your time.
Thank you for having me, Unathi. Yeah, why is it so intimidating?
Yeah.
I think it's really about the idea of, number one, we fear rejection, right?
That is so true.
So this idea that a dream house is something that you aspire for, and then the reality of how am I going to get it, means I have to face up to my financial position, And if it's not a great one, then there is a sense of like, you're a little bit embarrassed about it, and so you want somebody to give you some reassurance, know. But it all starts with knowledge, right?
Yeah.
Because at the end of the day, the old saying of knowledge is power is one thing.
Yeah.
On the other hand, when you don't have the knowledge, it's not bliss. It's actually very dangerous, right?
Is, yeah.
So not knowing your credit score, not knowing your affordability, which is the very start of this journey, can make it very daunting. So as soon as you understand how to get pre-approved, and we make it very, very simple and quick through our journey, because we understand the anxiety that's involved in it, you then are a lot more confident to know, okay, this is where I am, and if the story is a good story, then there's a lot of confidence about now I can go out and shop with confidence.
Yeah.
But if it's not a great story, then you kind of feel like you need help. You need somebody to guide you as to how you need to get to where you want to be,
The pre-approval part of the process is a very important one. As you were saying, it eliminates a lot of stress and anxiety, but it also could fast forward your journey towards acquiring your dream home. And you've said that you've limited the stress in that, and you've made it much quicker. Kindly take us through what that would entail. It would entail me logging on.
That's it.
Finding you.
Yeah.
And then what?
Yeah. So once you hit our platform, which is mortgagemarket.co.za, you literally create a profile. It takes probably about a minute to do. And then the second part of that is once you're on the profile, you click a button that says get pre-approved in 2 minutes. And literally what we would do is the moment you open that up and you enter in some data about your income and your expenses, it will send a live trigger through to Experian, which is our bureau partners, to pull out your credit score and display that back to you. And alongside that is also your affordability. So what we do is we look at the bureau data, we look at what it says about your income and your expenses, especially the fixed ones, because that's really what we are concerned about. The variable ones you can always cut back on. And if you earn additional income as well, we take that into consideration. We've got some, call it formulas that we have behind something called a codex with Experian that calibrates all of your income, all your expenses, and tells you exactly what you're likely to get. And it does it all within 2 minutes, and it's free of charge.
I'm so happy you repeated the 2 minutes, because I wanted to ask you, Tim, this is a PR campaign.
It really isn't.
Genuinely alleviated a lot of the stress that you'll find previous generations having to go back and forth to the bank with this document and go to your employer and get this certified, and then it needs to be certified, so go to the post office. What it sounds like is that you've eliminated a lot of back and forth administratively that could also affect us psychologically when it comes to possibly acquiring our dream homes.
Absolutely. That admin has wrecked the dreams of so many people. It has discouraged them. And so we've removed a lot of that. We like to say we work with the banks, but we work to empower customers, right? And so by eliminating all of that headache, right, what you're left with is really a simplified process that gives you the bottom line. And the bottom line is you want to know that you've got a good relationship with credit in the past, and that will be reflected through your credit score and what your affordability is. Alongside that, we also want to take away this idea that all the other hidden costs that come alongside it, right, is not something you stumble along a month into the process, and then that, again, sours the dream, right? So we let you know exactly what once-off cost you'll be in for, right?
I'm happy you're raising that as well, because the two things you mentioned were the 2 minutes, and then you said free. And I said to a gentleman today who wanted to give me something, and I said, nothing's free. And he said, it is. I said, even this conversation is not free because you're taking my time. So I'm so grateful that you said free.
Yeah.
How do you then
How do we do that?
costs back so that we know? I don't want you, Tim, now that I'm in my dream home, you're knocking on my door and you're saying, Unathi, you owe me this.
That's true. That's true. Well, there is a great deal of transparency that we operate with. So what typically happens is that Experian actually charges us as a company a fee, right, to facilitate the extraction of your credit score, right? We absorb that fee internally, and the bank actually pays us at the end of the process. And the bank only pays us on success of the process. So we take the risk of engaging you as a customer, giving you this information, and hoping that it is a good credit and affordability position that you're in, that you would find a house and ultimately come back onto our platform and make your application form. And so we make our money from the commission that the bank pays us, and you as a customer get to benefit from a whole marketplace model where the price efficiency is about saying, all the banks that are on the platform, all the banks that are lending, and you have the sufficiency of making a single application to all of them, and you can then negotiate your rate once quotations start coming back. And that negotiation process allows you to then lower the interest rate that you ultimately get, because it is a long journey. Unathi, as you know, you've owned property, you own property, you pay a bond over 20 to 30 years. That's a long time. And so if you don't have the efficiency of the best rate up front, you end up paying more than you should on this property, and that adds up. So the marketplace model is the best way to get a home loan, rather than going to one bank that will give you their best price, but not the best price in the market.
Not a comparative best price in the market.
That's it.
Talking Money Matters, as we do every single Thursday, because we want to keep the dream alive. We're talking property and acquiring property and making sure that we get the land. Not in a political sense, but we want the land, Tim.
Absolutely.
We want the land.
Absolutely.
You made reference to credit, and I've heard experts refer to good and bad credit. Please, can you take us through that? My father raised me and said, you will have no credit. So I come from a family that puts the fear of God in you.
Right.
So the only credit I have literally is my mortgage.
Is your mortgage, which is good credit, right? But I'll tell you why I say your mortgage will be good credit. And maybe it goes back to just the first principles of money in the wrong hands, right, causes damage. Money in the right hands causes a lot of value, right? And so credit is no different, right? If you use the credit to do things that are that appreciate in value over time, that can bring you utility value and appreciate, then of course that's good credit. If you use the credit for consumption-based purchases, then that's generally considered bad credit, right? So things like, then there's also this idea of inefficient credit, right? So a personal loan is inefficient credit, So it really is just credit that is linked to very high interest rates, right? Very inefficient. So you wouldn't use a personal loan to buy a home, which is a 20-year asset, right? You're using the wrong credit for
the wrong thing.
For that, So we often find that that lack of education has meant that a lot of our people, I'm talking black and brown people who are the majority of this country, right, haven't understood the importance of using a home loan to purchase property, right? So to use like a personal loan, or they'll take out very expensive loans to do so. And so those repayments, right, and that compounding of this long-term nature of it is not the smartest way to use credit. So if I had to maybe just zoom out, right, if you want to take out credit, then do so for a purchase item that you know will yield long-term value, right?
Yeah.
Beyond the cost of your borrowing.
Yes.
And that's really the key thing, is that you want to be able to use debt the right way, right? How the banks would maybe view it is they will also look at how you use credit, right? So if they see in your credit report that you have lots of payday loans, lots of personal loans, then they view that as a pattern of you relying on a very expensive credit, which eats away at your affordability, which ultimately will impact things like your ability to repay the mortgage on the side. So there's a lot to discuss around good and bad credit, but the most important thing to understand is that the longer the time frame of this credit, right, you want to have it as low as possible in terms of the interest rate that you're paying on it, right? And that's where a marketplace model like ours allows you to say, great, you're using the right type of credit, which is a mortgage. Now let's get you the best rate, and let's get you this price efficiency of getting to prime minus or comparing and making sure that you can negotiate the best deal.
You speak of the prime rate, and with the repo rate remaining high, how have the loan appetites changed in terms of what you're seeing in patterns and preferences?
So the loan appetite has been still great from the consumer, right? As you know, our market, or the South African landscape, is divided into multiple segments, right? We have the affordable housing, which is regarded as a mass market. Then you have the more affluent, the middle class, which is unfortunately shrinking.
Yeah.
And then you have the more, call it ultra wealthy, right? And property tends to do very different things across those segments, right? So the elasticity of property in the affordable is very, very resilient, right? So you are hardly going to find that the cost of an affordable housing a place, right, will appreciate very quickly over a short period of time, or even drop, right? So, and that's really homes between 600,000 to about a million rand, right? But when you get to the middle market, multiple millions of rands, right? With that market shrinking, the elasticity of those homes, right, is very wide. So the price of those could be as much as 20 or 30% what people ultimately pay for than what its listing price is. So it could reduce quite dramatically, right?
Interesting.
Because there are not a lot of buyers in that space, and ultimately, the sellers become price takers, right? And so it really does differ segment by segment.
I understand. May I ask, and I know it's got nothing to do with property directly, but
right.
It's something you've referred to repetitively, so I do want us to walk through that. Why is the middle market shrinking?
Well, there's no there's no easy way to say it, because
is that a fair question?
I think it's a fair question, because the property sector actually tracks how the economy performs, right? So we're in a state where there are not enough new jobs being created. There are not enough new entrepreneurs coming out. There are not enough. There's not enough disposable income that is moving around, almost in this chain through, right? And as a result of that, what tends to happen when there's a slowdown in the economy, everything else around it is affected by it,
naturally.
Right? And so even banks these days are having to grapple with a middle class that is shrinking and having to find other means of surviving. So things like people having multiple gigs, right?
Yeah, multiple sources of income.
Sources of income.
Yeah.
That's the way people earn these days, right? And that's the flux that we're experiencing. And with that means that banks also have to think differently about how they assess those incomes.
Yeah.
Because that's not going away. That's just the reality of where South Africa is, right?
10 years they would never consider a freelancer. But because a freelancer now can produce documentation to say, in my multiple sources of income, I take home X amount per month.
X
and I've
amount.
been doing so for the past 12 months.
That's it.
So I could possibly do so for the next 12 months.
That's it.
Are they having to consider those kind of conversations with the middle class now?
They're absolutely having to do so because that's the market that we're in, right? It's not as if, the economy is doing so well and there are big corporates around that are paying, people to be full-time employed there. So there is that shift towards understanding that people's income is not as easy to calculate, but we have no other choice but to do so and but to rely on that. And I think the more that becomes the main kind of market that we're dealing with, banks have to come up with new products. There will be fintechs such as ours who also come up with new products on how to fund these individuals. And right now, with the economy where it is, models like rent to own, rent to buy models are becoming more and more popular, right? Because people have a desire to own their own homes. They know it's the right thing, but their situation either with their credit isn't great, so they're having to settle with something that makes sense for them. That is a stopgap, and that's what a rent to own model is. And so these new products and ideas are coming out because that's just the way the economy is today, right? And it's not just South Africa. I think it's the rest of the world. I mean, COVID has really shifted us in a direction where, we can't rely on one source of income.
No.
Right? Companies are in a position where they have to compete a lot more, right? Because, there's just a very competitive space that even technology is causing certain companies that were buoyant before, they can't thrive in this economy. And so that level of volatility, right, is hitting everybody, and nobody's really spared from it.
And permanently. I think it's changed us permanently. To manage expectations before we let you go, as the co-founder and CEO of Mortgage Market, you promised me 2 minutes, right? to see what my playing field is.
Sure.
And after I've completed that, managing expectations, let's just say I go the full mile with you. How long could that process take us, and how quickly or how extended could it be due to the different factors? And where do we find you? You said mortgagemarket.co.za.
Yeah. So the moment you've done a pre-approval and you see that you've got a great credit score and your affordability is great, if you found a house, we'll obviously help you through that journey of making an offer for that house, and giving you guidance around what type of offer you should be making on it. And once you've signed that agreement and you've uploaded that offer to purchase onto your dashboard, it will literally take us 48 hours to get you quotations from all the banks, right? The quickest we've done it has been 15 minutes.
Thank you.
And that level of quick turnaround time has been so delightful to so many customers.
I can imagine.
Yeah.
You're taking me back to the trauma of acquiring. You're taking me back to the trauma of acquiring my first property, and just 5 days later, I must go back to the bank with this verified document. And then, no, ma'am, it's another 2 weeks. And then it's another, so... And also having one voice to usher you through the process. The voice as in mortgagemarket.co.za is beautiful. I think it's a wonderful initiative and a wonderful part of our society that we need. We know the history of land ownership. We know 100%. The history of the dreams that our parents have had for us. So thank you for making it easier for our people, as you said, the black and brown people that we care about, who don't have this experience. And as we were talking off air, generationally, we haven't had these conversations before. And it's because our parents didn't have the tools as well. So thank you for being that for us as a people. And thank you for giving us the confidence to acquire more properties.
100%. 100%. I appreciate your time.
Thank you. Thank you. The co-founder and CEO of Mortgage Market. You can contact them on mortgagemarket.co.za. Mr. Tim Akinnusi here in studio, making the conversation about acquiring property less intimidating and a little bit more approachable to more property acquisitions. That's what we're talking